Reader says to AK. The US I-bond very transiently last month yielded north of 9%, thereby inviting an unprecedented application rush. The next tranche was however yielding only 6+%. Within a couple of weeks. To me, this indicates a real expectation for a Fed pivot in Q1 or Q2 2023. The falling gasoline prices, lower wage inflation more than expected, plus a fall in the US 30-year mortgage rates and notional rent equivalents factored into the CPI are all pointing to a potential peak and a short plateau before rates start gently going downward. With this indicating a terminal rate of around 5% maximum, at a 70% probability, I am planning a barbell albeit equity-based approach with REIT acting as a natural hedge to the local banks. Technically, if the yield curve inversion broadens, recessionary risks rise significantly and the banks will start falling. This would be the time I will at adopting a contrarian approach. The current market is very tricky to navigate and essentially some natural risk. Protection with stable dividend pairs are also on my ad list. Let us see how it goes. AK says to Reader, yes, tricky is definitely the right word for the situation we are in. I have a feeling that a slowing down of rate hikes is at hand, although I do not know if a Fed pivot, i.e. a reduction in interest rate, is going to happen next year or not. A reduction in interest rate isn't a bad thing because that would mean that inflation has probably been tamed and a lower interest rate would reduce the financing cost for not just indebted businesses but also households. As for the possibility of bank stocks being negatively impacted, it is important to remind ourselves not to chase rising stock prices and to wait for a pullback before adding, which is what I am doing now. Technically, a retracement to support in the near future looks very likely. Investing in the local lenders at book value is probably what Buffett would consider paying a fair price for a good business, especially if we believe that Southeast Asian economies can avoid a recession, but, of course, if we can pay a lower price, it would be better. Time will tell.